Did you know the global economy is expected to grow by 4.1% in 2024, according to the International Monetary Fund? But what does that mean for you and your money? How can you take advantage of this economic opportunity and avoid the pitfalls that 2024 will bring? Welcome to Fun Financial Insights, the channel where we make finances fun and easy to understand. Warren Buffett, the chairman and CEO of Berkshire Hathaway, has a track record of beating the market and creating enormous wealth. In this episode, we'll explain the key economic trends and factors shaping the world in 2024. We'll also take a look at the 2024 economic strategies from Warren Buffett, the world's most famous and respected investor. We'll explain his rationale, his expectations, and his advice for you to achieve financial success. By the end, you'll have tips and advice on planning, savings, investing, and spending your money wisely in the coming year. So stay tuned and let's get started. According to the latest projections from the Federal Reserve, the U.S. economy is expected to grow by 1.5% in 2024, which is lower than the 2.1% growth in 2023. However, the expected growth is modest, but a positive growth rate. The unemployment rate is expected to average 4.1% in 2024, which is slightly higher than the current level of 3.8%. This may also mean increased job cuts. But there is good news. I will share a strategy from Buffett later on in the video on how to prevent this from affecting you. The Fed also expects inflation to increase in 2024 as the supply and demand imbalances caused by the reopening of the economy post-pandemic are resolved. The Fed forecasted a drop from 3.5% in 23 to 2.2% in 24, which is close to the Fed's long-term target of 2%. This ease inflation means your spending power may increase. You would be able to afford more goods and services with the same amount of money or save more money for the future. Mortgages get cheaper. When inflation increases, the Federal Reserve may lower the federal funds rate, which is the interest rate that banks charge each other for overnight loans. This can lead to lower interest rates on loans, such as mortgages. If you're shopping for a home, you might be able to afford home loans and potentially lower monthly payments. If you're already a homeowner with a fixed mortgage rate, you might be able to refinance your loan and save money on interest. And with more people owning homes, this leads to less competition for a limited number of rentals. If you decide to rent your home, you also might be able to save more money or upgrade to a better place to live because your rent will also be cheaper. So what does all of this mean for your finances in 2024? Well, stick around. I will share 7 strategies from the financial guru Warren Buffett on how to navigate these ups and downs. And first up is buy and hold. One of the most famous principles of Warren Buffett is to buy and hold quality stocks for the long term. He strongly believes that the best way to make money in the stock market is to invest in companies that have strong fundamentals, competitive advantages, and growth potential, and then hold them for years or even decades. This way, you can benefit from the power of compounding and avoid the costs and risks of frequent trading. Buffett bought $1.3 billion stake in Coca-Cola in the late 80s because of its strong brand and global growth potential. The stake is now worth $22 billion today. That's a return of more than 1,500% over 35 years. Tip number 2, stay with cash if necessary. During the dot-com bubble burst of early 2000s, Buffett did not suffer significant losses because he avoided investing in technology companies that were new and unproven. He also used his cash to buy stocks of established companies that were undervalued during the financial crisis of 2008 and 2009. He does not invest in anything that he does not understand or that he thinks is overvalued. He prefers to wait for the right opportunity to buy stocks at bargain prices rather than chase the market to pay too much. He also keeps a large cash reserve to take advantage of any market downturns or crises that may create attractive buying opportunities. Your job and financial assets may be affected as the economy slows down. You should consider having an emergency fund you can fall back on when you are unsure of investing. It will help you take advantage of investment opportunities when you are ready. If you're finding these forecasts and insights so far helpful, don't miss out on the strategies and other advice from Buffett. Subscribe to Fun Financial Insights for even more incredible lessons and ideas on managing your finances. Regardless what the economy looks like, hit that subscribe button and let's learn from Mr. Buffett. A third strategy of Warren Buffett is to invest in companies you understand. He only invests in businesses that have simple and clear operations so that he can easily analyze and predict their future performance. He avoids investing in companies with complex or obscure business models, relying on too much debt or leverage, or operating in highly regulated or competitive industries. Buffett has invested in companies like American Express, Wells Fargo, and Apple because they have straightforward and profitable businesses that he can comprehend and evaluate. He is not invested in companies like Tesla, Amazon, or Netflix because they have more complicated and uncertain businesses that he does not fully grasp. When you choose companies you understand, you can easily predict how they will be affected by the economy. This way, it will be easy to have a clear direction regarding your finances. A fifth strategy of Warren Buffett is to know the difference between price and value. He does not focus on the market price of a stock, but rather of the intrinsic value of the underlying business. He calculates the intrinsic value by estimating the future cash flows that the business can produce and then discounting them to the present value. He compares the intrinsic value with the market price and only buys the stock if it is trading at a significant discount or a margin of safety. He believes that the market price can be influenced by emotions, noise, and speculation, but the intrinsic value reflects the true worth of the business. Another strategy of Warren Buffett is to invest in index funds and real estate. He recommends index funds for most investors, especially those who do not have time or expertise to research individual stocks. He believes that index funds are the best way to capture the growth of the American economy without paying high fees or taking unnecessary risks. Now that the economy's growth is slowing down, he thinks that index funds are a good option because they can recover faster and better than most individual stocks. Let me make this practical. Buffett has instructed the trustee in charge of his estate to invest 90% of his money into the S&P 500 index fund for his wife after he dies. He believes that this is the most sensible and safe investment for the long term. Buffett also likes to invest in real estate, especially when he can find undervalued properties that generate steady income. He believes that real estate is a tangible and durable asset that can appreciate in value over time and can provide a hedge against inflation. He also thinks that real estate is a good option during economic downturns because it can offer stability and security, as well as tax benefits. A sixth strategy of Warren Buffett is to choose the right news to focus on. He does not pay attention to the short-term market movements, the media headlines, and the analyst options. He ignores the noise and the hype and focuses on the facts and fundamentals. He reads a lot of annual reports, financial statements, and industry publications to gain a deeper understanding of the businesses he invests in and the trends and opportunities in that economy. He believes that the right news can help him make better investment decisions, while the wrong news can distract him and lead him astray. For example, Buffett does not watch CNBC, Bloomberg, or other financial news channels because he thinks they are too sensational and superficial. He prefers to read the Wall Street Journal and the Financial Times and The Economist because they provide more in-depth and objective analysis and information. And the seventh strategy of Warren Buffett is to sell at the right time. Buffett sold his stake in Delta Airlines in 2020 when the airline industry was hit hard by the COVID-19 pandemic. He realized the business had changed for the worse and the stock had lost its value. He also sold his stake in Kraft Heinz in 2020 when the food company was struggling with declining sales and rising costs and accounting issues. He realized that the business had lost its competitive advantage and the stock had become overpriced. He does not sell his stocks based on market conditions, the price movements, or the tax implications. He sells his stocks based on the business performance, the valuation, and the opportunity cost. He sells his stocks if the business deteriorates, if the stocks become overvalued, or he finds a better investment opportunity. He believes that selling at the right time can help him preserve his capital, realize his profits, and redeploy his funds. So, are you ready to level up your financial game in 2024? If you're nodding enthusiastically, or even you're just mildly intrigued, smash that subscribe button and join us at Fun Financial Insights. Let's dive deep into the world of finance with a dash of fun and a sprinkle of wisdom. Remember, this year, regardless of the forecast, there is boundless potential. Your financial journey is your story to write. Embrace the future. Learn from the past, and together, let's make 2024 the year we redefine financial success. Thanks for being a part of this epic journey. Here's to a wealth of wisdom, a treasure trove of financial wins, and a whole lot of fun financial adventures in 2024 and beyond. See you in the next episode.